it better to trust the roar of the crowd or maybe the quiet whisper of a calculator when making investment decisions? Today, we're diving into a stock that's, well, it's forcing us to ask that very question. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Our deep dive today focuses on Micron Technology, ticker symbol MU. We're using data captured September 8th, 2025, around 8:15 a.m. ET, and our mission to really dissect the conflicting signals around this semiconductor giant, help you understand what's truly at play. Okay, let's get into it.
Yeah, what's fascinating here, we started with a market in a surprisingly good mood this morning. I mean, pre-market futures are pointing green, Nasdaq seeding. That feels like a tailwind for tech stocks like Micron, right?
You'd absolutely think so. But then, here comes the counterpoint. Respected economist Mark Zandi, he's sounding the alarm, warning the U.S. economy is teetering on the edge of recession. He's citing sluggish consumer spending, weak job growth. So how do you square that? This market optimism, especially tech, with such a stark warning, are investors just ignoring it?
Well, that's exactly the dilemma, isn't it? The roar versus the whisper. Zandi's caution is, well, it's significant, yet the market, particularly tech, seems really intent on climbing higher. It often points to a disconnect, where short-term momentum, maybe sector narratives, they just override these bigger economic concerns, at least for now.
Right, for now. Okay, so zooming in on Micron itself, it's a giant in memory and storage. They're chips. Crucial. Data centers, smartphones. We even saw a quiet vote of confidence, new edge advisors and advisory firm that increased their position. And then you look at Wall Street. Wow, overwhelmingly bullish. Something like 82% of 39 analysts rated a buy or strong buy. They seem to see only blue skies.
But, and this is a big but, if we look at the fundamental realities, our research valuation model, they tell a wildly different story. Based on its ability to generate actual free cash flow, which many see as a pure measure, and its earnings power, EPS, which is more that accounting profit number, while our fair value estimates are, frankly, shockingly low. We're talking $4.54 based on free cash flow, and $47.46 based on earnings per share. And that big difference between the two models for Micron, that itself is a flag. It highlights maybe capital intensity issues or how accounting affects cash versus profit.
$47 based on earnings and $4.50 based on cash flow, when the stock's trading over $130. That's not just a discrepancy, that's a chasm. It really makes you wonder, right? Are we missing something huge, or has the market just gone completely off the rails? This profound overvaluation, according to our numbers anyway, it forces you to ask, are analysts seeing some fundamental shift we're not? Or are they just riding this momentum wave?
Exactly. Riding the wave and maybe ignoring the whisper of that calculator.
Yeah.
Which brings up market sentiment. What are traders thinking? Options traders? The fast money, they seem pretty bullish. The put-call ratio is 0.54. That means way more bets on the stock going up. And that $130 call option, that's the really popular one right now.
Okay, so options are bullish. What about short interest? People betting against it?
Well, the bears are there, but maybe not an overwhelming force. About 2.86% of Micron's available shares are sold short. So, moderate skepticism, perhaps.
Moderate skepticism,
yeah.
But it's hardly the roar we see from the bulls or the options market. Okay, let's put opinions aside, even our own valuations. Just look at the chart. The technical picture for Micron, it's about as bullish as it gets. A totally different story than our calculator.
Oh, absolutely. The trend is undeniably up, long-term, short-term, both pointing firmly north.
And volume.
Volume backs it up. Clear signs of accumulation. There's a big surge in trading activity supporting this recent breakout to new highs. And momentum. It's not just positive, it's actually accelerating. A powerful surge in buying pressure. It's gaining steam, pushing into what some might call maybe overheated territory.
Right, overheated. And volatility.
Yeah, volatility's picked up too, which, you'd expect during a strong breakout like this. It shattered its old trading range.
Okay, so we've sifted through macro warnings, these fundamental conflicts, technical fireworks. What does this all mean for you, the listener?
Well, our official position here is a wait-and-see approach.
Wait and see. Explain the thinking there.
The logic is, look, the technical picture is like a freight train.
Yeah.
Bullish momentum that's incredibly hard, potentially painful to bet against in the short term. However, those glaring red flags remain. Specifically, the extreme overvaluation our models show. That presents a massive risk. A risk of a sharp, painful correction if or when market sentiment shifts. And with recession warnings getting louder, that shift could happen fast without much notice.
So it's that classic dilemma. A technically perfect-looking trade colliding head-on with what looks like a fundamentally questionable investment. Okay, so for the next few trading sessions, what are the key levels? Where's the battle?
Right. For the bulls, The challenge is clear. Hold $130. That's a key psychological level now. Holding that potentially opens the door to retest those recent after-hours highs around $136.
And for the bears?
For the bears, a failure by the bulls to hold $130. That's the first win. It could trigger a pullback, maybe first to $127, and then they'd likely target the next major support level, which looks to be around $119.
Got it. So in the end, Micron kind of looks like a rocket ship, doesn't it? Flawless launch sequence on the chart, but maybe a questionable fuel gauge from the fundamentals for the long haul. It might fly higher, sure, but you'd probably be wise to keep an eye on the exit. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.